Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for October 31st, 2007. Well, today was the Fed day, the infamous Halloween Fed day, and it was extremely interesting to note the market moves here because there were whipsaws left and right, and we're not talking about little small moves here. We're talking about when the market moved one way, it was a tremendous move on the Fed, and then the market reversed the other way and moved a tremendous amount the other way. And I'm going to show you some patterns and some charts here, and it just goes to show you how guessing what the Fed will do ahead of time and how the market will react, you just never know. And guessing what the Fed will do, well, okay, guess. But as I always say in the chat room, be extremely cautious playing a bet one way or the other, because it's really no different than going to a casino in Vegas and putting money down. 50-50 at best, and as we saw today, chances are if you were long, you got stopped out on the drop, and if you were short, you got stopped out on the rally. Because it was both ways, but such dramatic moves that anyone using a stop would have been pretty much taken out today from this move. And I'm going to give you guys a little show here of what happened. All in all, the market was up, and that's the important thing to remember here. And as I said yesterday in the video, I have no clue what'll happen. I said it was a very interesting market setup here. I said at some point we should pull back, but today was not that day. And when I talk about a move today, all in all, the NASDAQ finished positive, up 42.5 points, a 1.5%. The Dow closed up 138 points at 1%. The S&P closed up 18 points, up 1.2%. And overall, this is just a dramatic move higher. And this is the intraday chart, and it doesn't look like much, believe it or not, for the NASDAQ. But this is where it really got interesting. Okay? Right here is where we started to dip right here based on the preliminary ideas of people being scared of the Fed. Here's where the Fed came out. And you see the dramatic fall in the NASDAQ. And this is a big fall for the NASDAQ. All right, you're talking about 20, 30 points right here. All right? We actually were up about 24 points going into the Fed announcement. We went negative a point, and then we rallied huge. Look at this rally here. Took us all the way up, super high here, all the way up, basically rallying us 40 points. 40-plus points to be exact here. And then we sold off again. Not a dramatic sell, though. I mean, it was still a pretty hard sell, but not super hard. And then we rallied into the close and squeezed all the shorts again into the close. Now, looking on the ES, you're going to see a more dramatic sell here. And this is why I love the S&P futures chart, because you really see it so much more here. And you can see this dramatic fall. I mean, we took out the 20 moving average, the 50, and the 200 in one fell swoop here in this one candle. Right here, we were on it. By the time we hit the lows, we were well below it. We bounced a little here in this candle. We sold again. The following candle made a new low, then rallied back up, closed here, and then the rally started in the S&P futures. And here you can see what happened. We rallied all the way up, and these two candles are huge. I mean, for an S&P move in 20-minute span to do this type of move is dramatic, to say the least. And again, we sold off here. We hit the 20 moving average. We stayed on the 20 a little bit, and we rallied up into the close. Okay? So again, just to give you guys a sense, it's a super hard thing to trade the Fed. I usually try and just sit out. Otherwise, it's just asking for disaster. And at this point in my trading career, risk-reward is what it's all about. And if there's too much risk involved, as with any Fed announcement, it's just better to stay on the sidelines and just wait to see what happens. And then we go back in either later in the day or tomorrow or so forth and get right back to trading. So that's some of the interesting facets here. But overall, phenomenal day. Now I want to go over a few odds and ends here, and looking at some market moves here, it's going to be an interesting situation. Now what we saw here on the initial move, and I'm going to show you a couple stocks here like Countrywide, is the whole setup here was based on the Fed saying that they were going to continue to cut rates nicely. And by the way, for those of you that don't know, they cut the Fed funds rate and the discount rate 25 basis points each. And the key here why we sold off initially was because the Fed said we are a little bit concerned about the rising commodity prices, including oil, obviously gold, and all these other commodities, and we're a little worried that inflation is going to peek its ugly head back in the market. Well, if you take that for what it's worth, it's basically saying don't count on another rate cut. And what did the market do? The market initially sold. And again, here's Countrywide, and this is why it's key. In banking, financial, housing stocks, rate cuts are key. And that's what everyone needs to understand. So if you're looking for a trade based on the Fed, once you hear that there's inflation risk, then obviously you can look for a short, and that's what you saw here. Now, that's not to say there's no risk involved there, but at least if they're saying that, chances are sellers will come in Countrywide or any of these other financials and sell a little bit. You saw the same movement in some other stocks. To name one or two, SLM is one. We can see here the initial sell. However, that one did rally with the market all the way back, closing positive slightly. But the initial move was down there on the Fed, just like with the market. Now, on Countrywide, let's go back to Countrywide. What was interesting here was that we saw the move down on Countrywide, and CFC being the symbol here, and we saw a little rally back initially, but then it just continued to sell. So that one's going to be one on our watch list going forward here. A very interesting maneuver there, how it kind of just sold the rest of the day after a small rally. In addition, what we saw today was just monster moves. We saw Google closing above 700 at 707 today on the button for the first time ever, closing above 700. We saw Baidu trading up to $382.50, closing near an all-time high here. And overall, Research in Motion, the same thing. We had monster moves today. Now, going back to the charts here on the Dow, on the NASDAQ here on the daily, what I want to point out here is yesterday we discussed a possible double top. Well, guess what? We just burst through that today. Now, all of a sudden, this double top becomes a little bit of support. And what we want to see is tomorrow a confirmation that it is a break of the double top by another move higher. Should we reverse down and close lower down here, then we possibly can reevaluate and say, okay, well, maybe it still was a double top. But as of now, this looks like a clear break of a double top right here. In addition, it also takes in play, the 20 moving average is still in play, but it's solid support. So now you have two supports below on the NASDAQ. You have one support and two supports. In addition, what we can start doing is drawing trend lines here and connecting the lows. And what we're going to see here is this trend line is, notice how this trend line is now becoming to the point where the 20 moving average and this trend line will coincide. And that's key to understand, is trend lines always somehow coincide with other support areas. And it gives us a better area for support. Now what I also want to keep in mind is you can also draw trend lines down here. And notice how the bottoms all match up here. Okay? 1, 2, 3, 4. So should we ever come down and break this 20 moving average, which coincides with this trend line, the next line of support will be this. And this is just, I'm just showing lines of support. As of now on the upside, there's not much to say. We're above that level, and for the most part, we're broken out. Now the NASDAQ's been stronger, and obviously you guys know that. Being up 1.5% today, above the 1% that the Dow is up, the NASDAQ is obviously showing us it's stronger. But looking at the E-minis here, it's a little interesting here. We're not quite as strong here. We still haven't gotten back to the highs on the E-minis. So as of now, we want to pay attention to this point. Now this bar hasn't fully formed yet because it doesn't show up till the market actually prices that in once the ES futures reopen here. But in addition, what we really want to follow here is this line of resistance, and also we want to follow the trend line here, which is now above the 20 moving average. This candle now closed above the 20 moving average, and now this becomes support. All right, we also want to see confirmation tomorrow. In addition, on the downside, we want to look at the 20 moving average, and also we can draw a trend line here and note how it is the 50 moving average, is coming right into play with this angle. Also, eventually what we can watch on the downside, and again, I'm talking more downside here, more than anything because there's just not a lot to the upside. At least on this chart we have this 1 point up here. But in theory, you could easily run back to this and we break above that and we're off to the races again. So again, you know, it's a very interesting market here because you had oil up huge today. And that's something I also want to bring up. Let's look at the USO. Now, it wasn't that the dollar was weak today. I'm not saying the dollar wasn't, but we had a major reversal when inventories came in lower than expected on the oil numbers at 10:30 a.m. Eastern Time today. And to see the USO spike up this size candle, especially after reversing on the downside, and the USO making a new high, and oil touching for the first time $94 a barrel, that's a huge move. And I said this the other day, and I know there's a ton of shorts in oil right now, and that just gives more fuel to the fire on short covering. But when you have oil approaching $94, $95, $96 a barrel, it's got a beeline for that $100. And it would not surprise me within a week or two to see it touch $100 and then pull back. All right, I always like to see a break of that even number to the upside and then a pullback. And just like, you know, just to keep in mind that oil very strong today, major reversal in oil. Oil was down $3 plus yesterday. It was up $4 plus today, just to give you an idea. The GLD was positive nicely again today, and these commodities continue to be fueled here. And again, it's going to be interesting because if the dollar continues to fall, we have some major issues in this market. Major issues, because inflation will come back in. People are naive if they think commodity prices rising like this won't be passed through the consumer. We're already seeing it in food and energy. That's obvious. But it's the other issues that are going to be interesting. Yes, we have housing prices are coming down dramatically. Yes, the credit bubble is ugly. But now we have this commodity issue that is in my opinion, almost the biggest bubble we've seen since the housing bubble. All right, it's the new bubble, the commodity bubble. And yes, there is global expansion, and that's part of it. Part of it is geopolitical risk, yes. But at what point here do these prices start affecting economies? Because how long can companies still operate with their margins as good as they are all over the world? How long until we start having to pay bigger prices at Walmart or at Target or at Sears? It's going to come at some point, folks, and I really encourage everyone to do research into this because it's an interesting thing. In any case, folks, have a wonderful day. Come join the chat room, the swing trade alerts, the options alerts, the webinars. We got it all running on full steam here. Have a wonderful day.